I want to start by asking you about oil prices. Do you think that the current turmoil in the Middle East has the potential to push oil back above that record level we saw in 2008 of $147 a barrel? Or for that to happen, would something like Saudi Arabia have to be dragged into the unrest?
Well, the current situation is certainly causing oil to go higher, and oil will go over 150. It will go over 200 eventually. If we have more turmoil, it'll go over 150 in the next year or two. The problem is the world is running out of known supplies of oil, period. And so the surprise will be how high the price stays and how high it eventually goes, even if there's peace in the Middle East.
So you're saying there is an inevitability that oil will continue to head up way beyond $150 a barrel purely on demand and supply?
Absolutely. The IEA is going around pleading with people to listen that we're running, the world's known reserves of oil are declining at the rate of 4 to 6% a year. Figure it out. That's simple arithmetic. We're running out of known reserves of oil.
Okay, let's talk about the broader commodities picture. You have been a commodities bull for obviously a long time, Jim, and we have had a very strong run in commodity prices in recent years. How much longer do you think this bull run has to go in commodities?
The average bull market historically has lasted about 20 years. So this one, on average, has another 8 to 10 years to go. But the problem is nobody is adding capacity. Normally at this stage of a bull market, people would be adding new capacity, but they're not. No new supply is coming because 2008 and 2009 scared the pants off everybody, and so nobody's expanding. So we have an even worse supply situation than normal.
So what you're saying then, if there is no additional supply, which doesn't seem to be in the pipeline at the moment, again, commodity prices could go where? I mean, we've seen sugar, for example, up about 600% or so in recent years. What sort of numbers are you expecting?
I'm delighted you brought up sugar. Yes, it's up 600%, but you know what? Sugar is still 50% below its all-time high. The prices of these products are going to go to staggering levels compared to what we think of today. It always happens that way in a bull market. It's going to happen again. Supply continues to decline, and without supply, you're going to have much, much, much higher prices. But this is the way all bull markets throughout history have acted. It's going to surprise me, and I'm the bull.
Yeah, indeed. I mean, is this story then pretty much for any hard or soft commodity? I mean, is there any commodities you're actually a little wary of at the moment?
No, it's going to happen. It's going to affect all commodities. I don't know any where the supply is coming in that's going to overwhelm demand. I know of none where that's happening. Now, I own gold. I wouldn't buy gold today because it just made an all-time high. But if it goes down, I hope I'm smart enough to buy more gold. I don't like to buy things making all-time highs, but when they go down, I try to buy more, and that includes all commodities.
Okay, on the macro picture, Jim, if we look at what's going on, oil prices getting to these levels again, gold, as you say, at a record high, inflation now a major concern in Asia, the fastest growing region of the world, creeping inflation problems in Europe, and the US not strong enough yet to start tackling unemployment. How does an investor play all this? Is it as simple as plowing all your money into commodities?
Well, in the 1970s, stock markets around the world did badly, just as they've been doing badly for the last 10 years or so in the West. Except the only stocks that did well in the 70s were the raw material stocks. That's happening again. The raw material stocks are the best part of the stock market. They were before. They are always when we have a bull market in commodities. So you can either buy commodities or commodity indexes or commodity stocks.